What is the Temecula Valley real estate market going to be like in 2022? Is it still going to be really tough for buyers and great for sellers with multiple offers going over asking? What real estate investment decisions have Chris and I been making for our personal investments? That's what we're talking about today. Hi, I'm Jessica Genung with Active Realty and the Genung team. Thanks for checking out our channel, and we're going to get right to it today. Realtor.com said this month that 2022 will be the slowest home price growth that we have seen in a decade. They are predicting that existing home sales will rise 2.9% over the coming 12 months. Contrast this 2.9% increase with the S&P CoreLogic Case-Shiller Index's latest reading of year-over-year U.S. home price growth, which was up 19.5% between September of 2020 and September of 2021. There were two driving forces for home prices rising almost 20% during that time period. A nationwide housing shortage caused very low new home listing inventory and historically low interest rates, with the lowest average 30-year fixed mortgage at 2.7%. Many of our clients locked in mortgage rates under 3%, especially clients using a VA loan, some of which were able to lock in rates as low as 2.25, amazing interest rates that cannot last. But now the Fed is concerned about rapidly rising inflation. They were initially calling it transitory, but they are no longer using that verbiage, and they are expected to raise rates this year to help ease inflation. My opinion is that they are going to raise the rates very gradually so they don't cause a market crash. The current 30-year mortgage rate average is 3.1%, and Realtor.com predicts that those interest rates are going to rise to 3.6% by the end of 2022. This is actually a good thing in my opinion, because the housing market was rising way too quickly, and under 4% interest rates is still amazing. A 0.5% interest rate rise might not seem like very much, but an article in Fortune.com gives a really great example using a $500,000 home purchase as an example. 3.1% versus 3.6% is only $138 more per month, but it adds up to nearly $50,000 additional over the life of a loan. Even small increases in interest rates can have a cooling effect on the market. Let's check out this chart. This is the CoreLogic Case-Shiller Home Price Index. It shows home price growth since 2019. This chart represents why I think Realtor.com is likely too low on their estimate, and we will get into my thoughts in just a minute. So what are some other real estate companies forecasting? We're going to start with CoreLogic. They're forecasting 2.5%, Redfin 3%, Zillow 13.6%, but they have lost some credibility lately with their inability to predict home prices, causing their home buying program to go bust after losing hundreds of millions of dollars. Fannie Mae is forecasting 7.9%, and Freddie Mac is forecasting 7%. With all of this in mind, I agree with the author of this article's final thoughts. They say buyers and sellers alike should take housing market forecasts with a grain of salt, including mine. Look no further than the outlooks real estate firms put out at the onset of the pandemic. During the early months of the lockdown, Zillow, CoreLogic both predicted home prices would fall by 2021. Not only did home prices not fall, they have since skyrocketed. Lastly, one very important thing to note about all of these companies' predictions is that none of them, meaning zero, are predicting a decrease in home prices. So let's keep that in mind. My personal opinion, which is just that, my opinion, is that we are going to see closer to the Freddie and Fannie numbers of 7 to 8% price growth. My feeling is that starting in February, the spring home buying and selling season is going to ramp up again, and we're going to see healthy increases through most of the year. It's heading into the end of the year and into 2023 that I'm not sure about, and it's going to depend a lot on what happens with inflation and what the Fed decides to do with monetary policy. So as of right now, I see no signs of price declines or a housing market crash. But if that changes, I will be letting you know in upcoming videos, so stay tuned. Real quick, if you are finding this information helpful, which you likely are if you've made it this far, we would love it if you would smash that like button and consider subscribing to our channel. So the question for our business remains, we have been having a much easier time getting offers accepted for our buyer clients, and we are even able to negotiate the list price down on a couple of homes for clients this month. We are also up against notably less offers. With that being said, we are normally up against more than one offer, and it is still common to have to bid up and over the asking price to win a popular property, so we're still in a strong seller's market. A lot of folks are expecting a housing market or stock market crash in the near future. I see it on social media all the time when someone posts that they want to buy a house and a bunch of people respond to wait because a crash is coming. This is terrible advice. I had many clients a year ago, 2 years ago, that decided to wait because of advice like this, and they ended up getting priced out of the market. The truth is, we will likely see a correction or maybe even, God forbid, a crash at some point, but no one can say, including myself, exactly when. I absolutely have concerns about our monetary policy and the amount of government money printing taking place and the risk that that poses to our dollar. The most important thing is to evaluate your individual financial situation. How stable is your job? How long do you plan to live in the home? If you choose to rent as an alternative, are rents on the rise, which they are in most places? These are all questions that you need to analyze, and you may need a real estate professional to assist you, and that's what we're here for. Even given the craziness of this market, I still think it's an okay time to buy. Is it the best time? No, it's not the best time. In recent years, that was in 2011, but those days are gone for now. Folks, they're always skeptical about realtors telling them that it's a good time to buy, but I will share with you that Chris and I are currently buying. We bought a single-family home investment property in November, and we are in escrow to buy one more that's going to be closing in January. Both these properties, they're located out of state, and the purchase prices, they're much cheaper than Southern California prices. Reasons we are choosing to buy is because inflation is rising, so money sitting in the bank is losing value. We're locked into low interest rates, and if inflation outpaces interest rates, as it has done this year, then you actually make money borrowing for a mortgage, if that makes sense. Our goal for these properties is cash flow and to be able to weather any home price corrections. We have previously subscribed to Dave Ramsey principles of low to no debt, but with this high inflation environment, we are shifting our strategy a little bit. If you are interested in out-of-state investing, I'd be happy to have a chat with you about it. I'll touch briefly on investment activity in our current market here in the Temecula Valley. We have had a handful of investor clients this year purchasing rental property, but the vast majority of our clients purchasing homes are planning on living in them as their primary residence. And even a lot of these investors that ended up buying rentals, most of them, it was their intention, in a year or two, they're going to be moving into these properties. So for whatever reason, they couldn't move in right away. They're going to rent it to somebody else, maybe family members, but even our investor clients, ultimately this year, most of them have planned on occupying the investment properties that they bought. Cut. The reason there's not a whole lot of investment activity like there is going on out of state is obviously our prices. Average tract home in our area, 600 to 700,000. So your cash on cash return here in Southern California is very difficult unless you are putting down a huge down payment. So that's why most of our investor clients, it's kind of a hybrid investment / they want to live here someday. One more real quick. Chris wants me to remind you guys that if you're considering moving to our area, check out our relocation guide. It's down below in the description. It's available for immediate download. All right, let's get back to it. A lot of people are scared to invest in rentals or become a homeowner instead of a renter, and I do understand that because I'm typically very cautious when it comes to investing. But there is a cost to not taking action as well. So if you don't take action and make investments, you will not likely have a healthy retirement or achieve financial freedom if that's your goal. That's my 2 cents. Let me know down below in the comments if you think prices are going to continue to rise in 2022. I'd love to hear your thoughts. Thanks for watching. Bye.